Hello, this is the CEO of Weisenbach Investments, and this is the Weisenbach Investments monthly market review. So first, I would like to take a look at E-mini S&P 500 futures. Now, as you know, European news came out about how they've come up with a bailout fund, and the markets gapped up, and they took a nice gap up right here and rallied. So here is that gap up you're looking at. And let's take a look at the gap up on the daily chart. Right there. Shot up. So right now, I recommended to the customers that we should short the E-mini S&P 500 futures, and here's the reason why. As you can see, it's down about 4.1% there. But the market's rallied, and then you look at it, it falls into kind of a market profile. The volume has dried up short term. Now, markets did not react to economic reports last Friday. So now they're reacting. And also ISM manufacturing numbers came out, and they're very poor today. So finally the markets are reacting to the bad economic reports. And another thing you have to remember is a bailout fund, right? Well, the countries that are going to be bailed out still need to take on more debt, which they already have enough of. So if they're taking on more debt, they have to pay down all of it. And even if it's at a lower rate, they still have to pay it, and they still have to have more debt. In the case of Greece, for example, they have not completed spending cuts, layoff, wage cuts, etc., etc. They've not completed this, and then they keep asking for more money. So, and they're not getting what they want. So, I would be short the S&P 500. The only real risk here is there's going to be low volatility on this holiday week. Wednesday's the 4th of July, so it's going to be low volatility. It's about 10:46 right now. I'm able to put out this video. All the Weisenbach positions are in profit. Another thing, we went short oil today. We thought it would bounce back above its point of control, and it moved up and it hit right into a place where I would not like the value area. So it came down and we shorted. It's down about 1.6%. So in the long run, we think it's time for crude oil futures to pick up. They've had low, bad demand. So I think demand is going to come back right in to crude oil futures. Because remember, the U.S. still relies on crude oil. We still rely on it. We still need it. So the market just drove the price down because of all this European glut. I'm calling Europe a glut because it's just another issue you have to deal with. But oil long run is okay. So for example, I want to take a look at corn futures. Now, corn futures have jumped too far too fast. Now, I wouldn't short them because the thing in the Midwest, you see, they've gone up too far too fast. But look at how much they're up today. So I would stay out of corn till it can go down and get a cheaper price. can get you a cheaper price. Like right here, it's almost at the top of its profile there, but I would wait on corn. Like if this profile can expand at 677, I would get out of corn because it's too darn high. Like look where it is at 677. Once it gets out of its value area, it's definitely gonna have some trouble. The monthly market profile probably could expand to this top of the value area around here, maybe even this range, and then I think the price will have to start going down. If you look at the last month, it's way above at the very top. So I would be careful with corn. And I know I mentioned that in my short-term futures update, but I'm just letting you guys know again. So let's just go back to the S&P 500, and I'm going to discuss Europe. So Europe still has problems. Their problems are far from over. Germany established a bailout fund, yes, but remember, countries still need to be bailed out. So the problem is not solved. And then, like I said before, they have to take on more debt. And they have to pay that debt. And Greece is not really going to do anything about solving their problem. And they demand more money. So they're going to get in deeper debt if they keep going on this path. For example, Spanish rates actually rose during when that announcement about Germany was put out, because Spain has to take on more debt. Another problem, Spanish banks are giving out very risky loans when their deposits are drying up, and then they're being bailed out. So what do you expect? Anyway, Dow's down too, so it's probably going to be a slow week. See around here, there's very little volume. This is a little profile. You can't really see it, but there's your profile. There's very little volume. I wouldn't expect much movement this week, but I would be short. You see, if it gets in this 1280-20 level, 1221, it'll probably take a dive. So, some people warned me not to pay attention to Elliott Wave, but I like it. So here's our V pattern, and this could be wave 1. So we're looking at wave 2 is probably going to go down. I mean, the market cannot go up. We're in a downtrend ever since here, really. And the market has problems. Is having issues there. So I think there's more downside risk. So right now, all our strategies, all Weisenbach Investment strategies, are positioned like a long-short fund. So for everything long, we try to be short. This week, we are more to the short side than to the long side because of what we think is going to happen in the market. So, what we would be wary about though is if there is any good news from Europe, even the debt news, that is short-term good news, but it may take a while for the market to completely realize the reality of it, because people think short-term. Most people think short-term. And then, so they shocked the market up because of what happened. So, looks like there can be some signs, like the monthly market profile is too high, and the price is going out. So it looks like there's some signs. We're still low volume here. It's shot away from low volume, but we're pretty low volume there. Compare that to the top. And then if you compare that to the bottom. So the only place this price really has to go is down. But if it goes up, it'll be knocked out. Completely knocked out. There's no way for it to go higher. For example, ProShare Short Fund. This shorts the S&P 500. Hit the bottom of its market profile. Should bounce back. Now this is kind of a wave 1, wave 2, and then wave 3 is next. So that wave 3 is actually the best wave to get in to. So how about let's just take a quick look at the Elliott oscillator. Okay, so the Elliott oscillator, it's a way that makes implementing the Elliott wave a little easier to look at. So here's wave 1, wave 2, and the next wave should be wave 3. The Elliott wave oscillator is drawing up. The red is drying up. So let me, I'm just going to delete all drawings. The red, the down wave is drying up, so it's a sign that the price is going to start going up. So as you can see, what happens is it starts downwards, tops out, and then it starts drying up. At the dry up, the price starts going up. And then that's what we look at. You know what I'm thinking? It could possibly, this could actually be a possible wave 1, wave 3, wave 4, and the next could be wave 5. So that is also a possibility. So we'll just kind of watch the trend, but I would be long right here at this level, and plus this is a, looks like an okay support level. It's far away from its resistance level, so no worries there. So I would be long the short fund. Okay, thank you for listening. This is the CEO of Weisenbach Investments. We're a customized investment newsletter company. We track short-term trading and active investing. And that's what we are best at. If you're interested, go to weisenbachinvestments.webs.com. Thank you for listening.